Hi, everyone. Welcome to Accounting Profits and Prosperity. I'm your host, Louis Prosperi. I am very happy to have Randy Crabtree, co-founder and partner of TriMerit, who is celebrating 15 years providing specialty tax services. As well, Randy is also the host of the Unique CPA podcast. Randy, welcome to the show.
Louis, thank you for having me here. I'm really looking forward to the conversation.
Yeah, just to let everybody know, before we started, we got into a conversation on its own, and hopefully we can capture that enthusiasm throughout this event, because that was pretty cool. The first thing I want to ask you, because when I was doing some research on you and your firm, TriMerit, tell me about the origins of TriMerit, because I really love that name.
So the origins of the name we're getting into then, right?
Yes.
So it's pretty interesting because the concept for the business, which is a specialty tax firm, we support, tax preparers. That was the easy part, figuring out what we were going to do. Coming up with the name was the hard part. And what happened when we originally were starting to put this together, there was three of us that were talking, part of the Tri, and that the three people had three different roles: compliance, project management, and business development. So we all had different skills in there. So we thought, okay, and plus triangles, you can build a triangle around three and all that. Yeah. So the Tri started to come around pretty quick. But honestly, this was probably a 2, 3, 4, 5 week process to come up with the name. And then I think the Tri came in, and this is the interesting part of the story, and I'll get it wrong a little bit because my wife will get it right. She actually had a dream, and the dream was part of where the Tri came out. We were talking, and we had three people and all this stuff, but she started dreaming, and she woke up one morning, and I got a name for you. It's Tri. And then I can't remember what she said after that. But so the Tri came out of her dream. Just as a side note, we did a surprise 60-year marriage ceremony for my parents based on a dream my wife had too. So she comes up with some good ideas in her dreams. Good. Yeah. But then it was like, okay, Tri. Well, one of our people left. And it was like, well, buy doesn't have the same ring to it. We're not going to go with buy something. So we stuck with Tri. Before we even started, she decided she wanted to go do something else. But then I started thinking, okay, what are we doing? We're doing credits. This is something that you've earned by what you're doing in the business. This is something you deserve. And it was like Tri credit, Tri earned, Tri, value, Tri merit. You deserve it. I started just looking up, synonyms. Do I have that right? I think it's synonyms, or I've looked at a thesaurus.
I'm not a grammar teacher, so you're fine. You're good. Yeah, that sounds good to me.
So I looked up in a thesaurus and found out goal. What are other things? Merit. You earn this. TriMerit. That's the quick and that's pretty quick for me. That's the quick version of the story.
Well, what I like about the story is you guys spent a lot of time. It was 5-6 weeks or longer. And by the time you finally got the name, one person left, which is interesting. I thought that was kind of that's how long it took to get this name.
Exactly.
I love the name. I also was, one of my things with the things that I do is the defining component. And what I really loved about your firm and you is you've already defined yourselves in the name, Specialty Tax Services. And the great thing I loved, and I'm paraphrasing this, we do the work and you take the credit because you're the professionals for the professionals, right? You help them with these specialty tax services. And I love that. And how did you get into this market of being the professionals for the professionals? Like, what made you decide to go that route?
So when we first started, the decision was, how are we going to go to business? Well, the first day in business, I went to a local CPA firm, the people that I had known, not well, but I knew them, and basically just said, hey, we've just started this business. And actually, it was probably pre-opening by a week or two. So a first official day of business, this firm that I had gone to talk to, and a decent-sized firm here in the Chicago suburbs where I am, they sent us to one of their clients. And we used to take deposits on work. We don't anymore. We do everything up front, no cost, until we find that there's a benefit, and then you pay us down the road. Well, with this one, I walked out the first day in business with a $20,000 check in my hand as a deposit for the work we were doing. We were going to get them, looked like $150,000, $200,000 tax R&D tax credit, and did that. And then we were thinking, boom, this was nice. We had the CPA firms, basically buy in that we were the people to talk to. And it took us a little while, but we realized we shouldn't be going direct to anybody. We get involved with the tax preparer and we educate, and that's a key component with what we do. We educate the tax preparer on what our services are and the benefits and who the clients are. Then that's one firm I've educated, and now they can send us to, it's the one to many. And so
Right.
supporting the CPA firm was important for two things. One, just business growth. That's good for us. But two, me coming out of public accounting and being a tax advisor, tax preparer, I would never have felt comfortable if one of my clients comes to me and said, hey, somebody just came to me and is trying to sell me these tax credit services. I would be skeptical right away, and I figured everybody else would be. So why go to a client direct? Let's go to the tax preparer. Let's get a good relationship going there, which is not quick. This is not an overnight thing, and once we do that, though, then it just expands. So that was really the philosophy of going to the tax preparer rather than to the client direct.
So that's actually a very, because one of the things we talked before the start of the show was the collaboration issue, right? Because one of the things that I think strongly about the professional industry is professional service people tend not to collaborate as much as they should. And what's interesting is there's so much specialty that can be in the industry, right? And the key thing in the industry is find out what you don't do, right? Define yourself with what you don't do,
Yep.
and then find professionals in your industry to help you do that stuff. So you still can do it, but you're not doing it. You know what I'm saying? And I love the fact that you went, and it made perfect sense, right? Because the one to many, if you go to a bunch of CPA or forget about CPA, just tax preparing professional firms, because they're not necessarily CPAs.
Correct.
And you go to them and you go, we have these programs on these specific things. They might have 2 or 3 customers that do it, but when you add all of them together, it makes sense, right?
Oh, yeah.
And you get really good at what you do. So I love that. How did I know this question has probably gone on a bit, but the pandemic, right? I don't know if you heard there was a pandemic recently.
I did kind of notice that.
I don't know if that impacted you or anything, but now that we're technically coming out of the pandemic and people are trying to go back to normal,
Yep.
what have you seen in our industry with regards to customer interaction and staffing? Do you think we're going back to the old, well, not old, I guess it's old because it's 3 years ago, where face-to-face is going back and then staff is coming into the office? Or do you see that there's been a permanent change, how we interact with our customers as well with our staff? What have you seen?
So there's two different answers there based on the situation, and probably even more. The first is we're never going back to the office is the place 100% of the time. It's just not going to happen, and I don't think it should. This is my opinion. I know people have difference of opinions, but why am I going to make someone sit in an hour in traffic of every day when they can have that extra hour with their family or something like that? It doesn't have to happen. So I don't know if you're familiar with Convergence Coaching, Jennifer Wilson, Renee Mulders. They just came out with a benchmark survey. And I just talked to them about this yesterday on this whole, and the survey is anytime, anywhere work.
Right.
And the change that's happened in our profession, it was specifically our profession, in the last, it was a 20 survey, this is the last time they did it, then they did it at the end of 22, and the numbers, the change was tremendous. And I'll get the percentages wrong, but, in 20, there was 42% of the firms allowed people to work remote, on occasion. And now it's 80+%. And they're not going to go back. The amount of people that now are hired remotely, not even in your geographic region, is just skyrocketed to the point where I think it was 80+% of the firms say they now hire remotely. And so from that standpoint, it is that change, and I think that's a great change. That change is there, and that change is going to stay. Interaction with clients is probably evolved too for us personally with R&D tax credits specifically, but we do other things. We used to go out to every single client, starting in 20, even through 21. We just couldn't.
Right.
And I'll tell you this, we were able to do everything through Zoom. We did get out to some clients, and from 2020 to the end of 22, we probably tripled in size. So from a standpoint,
Wow.
us not being in front of clients, we were able to still continue to grow and without really any hiccup, and we were still able to get the work done. Now, we are going back to clients more often now. I think you mentioned that face-to-face is good. The one
Yes.
thing where I've seen a significant change in people wanting to get together is at the conference level. We held a virtual conference in 21 and 22. We had 350 registrations in 21. It was about 250 in 22. I was surprised it went down, but what I'm realizing and what I found out is people are done with the virtual conference. Maybe a hybrid, but now what I'm seeing is QuickBooks Connect this year was just, sold out like immediately. Everybody wanted to be there in person. XeroCon was another one, big attended event. I go to
Yeah.
20 conferences a year and everybody is just thrilled to be there face to face. So I think
Yeah.
that is an area where even if we're working remote, we still want to get together, and a conference is an area where a lot of people are really enjoying get together.
Yeah. Yeah, I think you hit something very. You don't know what you don't have until you miss it, right? So
Yep.
conferences were. So I think you're right. I think it's like a pendulum, right? Right now we were all virtual. Now we're probably going to want to go to conferences. I think there's going to be a medium, to be quite honest, between the virtual and the
Yep.
because at the end of the day, busy schedules, it's hard to be in everywhere. So you might pick the conferences, but I agree with you. The face to face is something that I missed. I didn't think I was a very social person until the pandemic came, and I realized, no, I like being around people.
Yep.
It was an interesting concept.
If I
So,
can, sorry, Lou, I didn't mean to
sure.
interrupt you, but if I can expand on that real quick, well, we'll see if I can do it real quick. When the pandemic started, that was a huge concern of mine. How am I going to get in front of people? How am I going to see people? I was out speaking at conferences. I was meeting people
Right.
at conferences. And then it was just immediately, it was like, okay, we've got some virtual stuff. I would go on and do a webinar, but I don't see anybody's reaction. I don't know what's going on. In the long run, within a month or two, it just became natural. And there was still the interaction, whether it was just typing messages and all that. And from that standpoint, if we go like to the one to many again, I was in front of more people, and I built stronger relationships in the 2 years that we were basically fully remote, which the most part the industry was, than I did in the prior 13 years going face to face in conferences. So it was amazing the change. Now I am thrilled to be back in person though too.
Yeah, I think there's a moderate level for both, Randy. I agree with you. The bulk of my consulting practice outside of this, it was virtual. I've been doing virtual way before the pandemic, so I was preparing way ahead of time. You know, but I do miss the face to face. You can't beat it. It's very time consuming. So now you can pick and choose. So I think your business model will allow you to be more active and productive and pick and choose the face to face compared to the virtual and still get a lot more
Yep.
activity. You know what I like to do? I like to switch gears a little bit and go into a little bit of the advisory component
Sure.
of tax services, because I don't know if you've heard recently, or advisory services is the new buzzword.
Yep.
Advisory this, advisory that. And so we're going to go tax service advisory
Yeah.
component. Now, one of the things that I want to talk to you about, and by the way, I'm not a tax expert, so please forgive me if I make some general faux pas here, is when it comes to tax services and preparers, for the most part, tax preparers can do the basics and the semi-complex, right? But tax is a very complex thing, and to be an expert in all of it is hard. When should a general practitioner, I'm going to call them general tax
Yep.
service practitioners,
Yep.
seek out an expert? Like, when should they say, okay, I've got a customer, or how do they determine when it's time? And what should they do? Like, what are the things that will help them make sure that they provide the advisory service, but at the same time get the right help that they would need?
Yeah, so that's a great question, and we talked about this a little bit. I don't know if it was before we started recording or after. I think it was
It
before.
was before. That's
Yeah.
why I brought it back.
But the issue is, as a tax preparer, like you said, you cannot know this. Put my hands here. This tax code, you just can't. You would know parts of it exist. You know that there's things there that you need to understand, but you're never
Right.
going to be an expert on that. So it depends somewhat what your client base is. If you're let's say all 1040 work, well then it's different than if you're all business returns work. And let's pick business returns for a second.
Sure.
And let's narrow it down. We can expand it later if you want, but let's narrow it down. Let's say you do business returns and you deal with a specific niche too. You've turned yourself into a niche, and I think you say niche. I always say niche. I'm probably wrong, but we're going to go with it.
No, I'm Canadian, so just let you know, we say certain things different. About and our Zs. You have a Z, we have a Z.
Got it. All right, I'll try to say niche occasionally. We can work that in there, but niche comes natural to me. Let's say you're a niche expert, and let's say I have a friend who is a niche expert in craft breweries. Great expertise. Fun business to be in, and that's part of his passion that he's actually built into his business too, which is that I could talk about all day, turning your passion into your profession as well. We won't do it right now, but let's say I have this niche and I know everything about 1120s or 1120s, and just for you, those are corporate tax returns, which I figure you knew already.
Yeah. I know a little bit.
Or 1065 is a partnership. Expert in that in general. But now I just have a new craft brewery that's building a new facility, and I know there's a lot of incentives out there. In fact, there's some new incentives that came out of the Inflation Reduction Act that are around buildings. There's older incentives, and you can't be this knowledgeable person in the specific industry and all these, let's say, and I'm kind of being self-serving a little bit here because I'm talking about some credits and incentives we do, but all these credits and incentives too. And so at that point, that this brand new 40,000 square foot building that your brewery built, is eligible for some potential credits and incentives out there, but you can't do a cost segregation study. You're not an engineer. You can't do an energy efficiency study. You're not an engineer. And so at that point, I have to build relationships with somebody outside my circle of employees. And you do that. I mean, it can be a LIFO study. It can be even just building a strong relationship with a financial advisor for 401k projects, things like that, because you can't do everything. And this is my opinion, I don't think you should do everything because it's going to water down your expertise. In my opinion, stick to that niche, become an expert, and then deal with that client base, but that you can get support anywhere. I mean, there's so many experts at different areas out there. And if you don't mind, let me tell a quick story. We have a conference. We're going to have our third annual conference this August. Part of the registration is going to be list your top 3 expertise, whether it's a specific industry niche, it's a specific service, it's a specific, I deal with startups, I deal with mature businesses, whatever it is. If you feel you have a strong niche in that, I want you to put that on your registration. We're going to make a database of that we're going to share with everybody that registers. And now ahead of time, you can go search that. I'm dealing with a new nonprofit, but I really don't have an expertise on there. I see Sally's going to be at the conference, and she has a strong expertise in in nonprofits. Now, I want Sally and, let's say it was Jim. I want Sally and Jim to get together at the cocktail hour, seek each other out, and start talking about ways they can collaborate, ways they can help each other, ways that they can make the entire community of accountants better by working together. So that's a key. So the really long, and I'm sorry, answer is stick to your lane and know that the rest of it you can get outsourced help with.
So I'm just gonna do a bit of a summary for you because I really like that story. I like that, and I don't know if you noticed, but I was nodding a lot.
Yep.
I agree with you. So we're gonna go to, and I think is the best thing, is define what you don't know, right?
Yep.
Find what you don't do or
Yep.
don't know. It could be the same thing, right? Don't do, don't know. And then find people in your profession and go collaborate with them, right?
Yeah.
What we talked about at the very beginning. And it sounds like you just said that. And that's where, and by the way, there are companies. I mean, Tri-Merit is, I think, one of the pioneers, but I'm sure there's other Tri-Merits out there that have done this to support the profession. Right?
Oh, yeah.
So
there's
I
plenty
think
of
it's
people.
great. So let's talk a little bit about the fun stuff like audits. Basically in the U.S., and I got this right from your website, is the chances of getting audited is 1 out of 200, which is about 0.05%.
Yeah.
So the chances of a professional practitioner having audits done on their customers, it's not zero, but the chances are they will have experience with it. With one of your things, is one of the things that you practice is what should a general practitioner do to sort of be proactive with all of their filings, just some basic tips so that when an audit does come, at least they're more confident in that process. If you can give some suggestions on that, that would be great.
Yeah, and so this is a very important topic, because what we were just talking about, you're going to find a partner to help you, outsource partner or relationship with somebody. You have to trust their work, and so that relationship has to be built on a lot of trust, but also relationship building. So what you need to do if you are going to outsource something, and a great example of that right now as we sit and speak, is the employee retention credit. I mean,
Oh man, you just blew it for me. So let's go right into it, because that was my next question is, in addition, can you please talk about the employee retention credit? So let's just go right into that. There's no point in stopping. So please tell us about the employee retention credit, because it's time limited and it's very valuable. So
yep,
Randy,
that's fine. That wasn't on my list of pre-questions, so I like that we're zigging and zagging. This is awesome. So sorry, I gave behind the scenes information there. I got a few questions ahead of time.
No, fantastic.
And we haven't actually followed the script anyway, so it's no big deal. I don't like following the script. So what I was going to say, so employee retention credit, yes, very valuable. The benefits could be tremendous. The problem with the employee retention credit is there is a ton of misinformation out there. There are, and I'm going to sound negative, but there are firms popping up that this is my opinion, their whole philosophy is, let's just go charge fees and let's get as many fees as we can. And, I'm very jaded, because what I see is, let's not worry about the qualifying, the quantifying, the documenting. Let's just get a 941X in there and file it and get the refunds and get our fees up front. That's where the preparer needs to be really. This is a great example of the cautionary tale of just relying on anybody's information. Right. IRS, AICPA, both just came out with information saying, here's one with the employee retention, and I'll explain the employee retention credit in a second, because it is valuable. I don't want people to sound jaded about it, that I'm jaded. Right. But you have to be careful. IRS just came out, and AICPA, with a risk alert that said there are certain situations where your clients are going to be reached out to by an outside provider, and they're going to do an employee retention credit, and you are not, as the tax preparer, going to trust that this is real. You look at it and you know this client doesn't qualify. What can you do? In that case, both of them said, you can't do anything. You can't file the tax return. You can't even file the income tax return for that client if you don't feel that this is a defendable credit. You are putting yourself at risk by doing that. So this is an extreme example, but it is very prevalent right now. And tax preparers, biggest part of my education is educating on the misinformation on employee retention credit. I mean, I've been asked to do this nonstop. There's some things I can't say, information I've heard. Let me see. I shouldn't even have said that. The bottom line is they're coming after people. The taxpayers are the victims in a lot of cases in this case, and so because the taxpayers don't know any better, the tax preparers should, and they need to. But do you want me to start going into the positives of the employee retention credit? It's up to you.
That would be nice, because it's actually a very good program out there.
Yep.
And it's something that I think all businesses that do qualify should take advantage of it.
Yep. And everybody needs to look at it, because you can qualify without even realizing you do. But the employee retention credit is just as a quick, and everybody's probably sick of hearing it because there's marketing nonstop. But here, real quick, the employee retention credit for the last 3 quarters of 21 and the last 3 quarters of 2020, the first 3 quarters of 21. The definition changes from 20 to 21. There is a small subset of companies that can qualify in the 4th quarter of 21, but you can qualify, the qualification doesn't change. You can qualify in either year with a significant drop in revenue, 20% in 21, 50% in 20, in any quarter compared to 19. So it's a quarterly, which is missed a lot, because companies think, oh, my year was pretty good, my revenue was in par with 19, but when you dig it down to a quarter level, second quarter of 2020 could very significantly have a drop, and then they caught up later in the year. That is a safe harbor rule. That percentage drop, you qualify. That's why everybody needs to look at it, because you could very well qualify with this and not even realize it. The secondary way, and this is where the truth gets stretched in my opinion, is you can qualify if you were affected by a government mandate that restricted your ability to conduct business. This is pretty much, it has to be a direct effect. A restaurant was closed, boom, direct effect. A restaurant had a reduction of capacity, direct effect. Even if they could deliver, even if it's curbside pickup, even if it was outdoor seating, all that's fine. The fact that indoor seating was closed. What happens is the people go a little further and start saying, well, were you affected by a government mandate? Did you have to work at home? Did you have to wear a mask? Did you have to put a plastic partition in? That stuff doesn't qualify you, and it gets pushed a lot. So you have to be very careful. That's why the practitioner needs to dig deeper and be active, at least in the process if they can. And if they get surprised by it, they have to analyze that before they file the tax return.
And when does this run out? What's the timeline on this?
Yeah, that's another thing, is that people are saying, they're using scare tactics that, hey, you got to do this today because this money's going to be gone and the time's going to expire. The first deadline to file all of 21's credits, so every quarter that you qualify, in 2020, every quarter you qualify for in 2020, that doesn't disappear, the ability to file the amended return, until April of 24. So we have still more than a year before the 2020, and the 21, all the quarters, April of 25, every quarter.
So there's no rush, but it's something that they should look into and make sure it's clear.
Yep.
So that's great. Thanks for, I thought that was great. We went right into that question as a tax credit. Now, here's something that I really like, because you guys, your profession, or not your profession, your specialty is tax credits, right? And what you have is something that's interesting. It's a tax credit study, or studies you do for the professional practitioner. And what I understood from it was basically it helps the professional tax preparer decide whether or not to take an engagement based on your studies, right? Mm-hmm. How does that work? Because what happens then is it allows the preparer to say, I've got this thing that I want to do, and they come to Tri-Merit, and Tri-Merit goes, well, based on this, here's what you can do. Or how does that work? Because that's a really useful tool, and I've never seen that anywhere else. So how does that work?
Yeah, so our studies are basically us doing our projects, but it starts with the preparer identifying a potential opportunity. Again, they're not the expert. They know this exists. They identify the potential opportunity. And as a side note, I do tons of education on tax credits, tax advisory, tax incentives. And so I help prepare them and equip them with the knowledge to identify opportunities. They identify an opportunity. They usually connect us with the client over email, over a phone call. We actually do all of our work to basically qualify first. Are they qualified or not? If they're not qualified, then there's no reason for us to go forward. If they're qualified, then we're going to continue to quantify, document everything. Because if we can't document, we can't take it either. If we can't prove it, we can't take it. We personally do all that without any financial commitment. So we're going to get to the point where the taxpayer knows the benefit, the tax preparer knows the benefit before they decide if it makes sense to move forward. And so that's just always been our philosophy. But it's really a hands-on process for us. We have to talk to the client. We often have to be on site with the client. We have to analyze financials. We have to analyze the documentation. And then if everything makes sense, we'll tell them it makes sense to move forward, and they make the decision.
Well, that's great, because there's what you've done here is, and this is something that I've always promote as professionals, we should be taking a certain amount of the risk, right? When we're the experts, right? So how we bill and how we determine a value, we end up, it should be that way, in my opinion, is that we should be able to say to the customer, and particularly the great thing about the tax side, Randy, it's not as soft as the other things like business management development, transformations of companies. Those are much harder to quantify, but in your profession, when it comes to taxes, you can easily quantify benefits versus risk versus what's allowable. So it's fantastic. I love that part.
And that's the other thing. I know you're a proponent of value pricing, at least I think you are. And the cool thing with taxes, you can show the value. You can show, hey, you just saved $50,000 on taxes. Right. And so it is nice. It makes it easy to help make decisions if it makes sense to move forward or not.
And what's great about it is the way you do it is you show the value up front, so people make the decisions before they invest, which is fantastic. I'm going to have one more technical question, then we'll go back to more general discussion. But one of the things that I really liked, and this is something I think has to be with a lot of expertise, is the cost segregation program. What I really loved about this is how you can take long-term assets and front load the amortization. So when you need the money the most, which is usually during the early stages of your business development, you can allow your taxes to fund future growth, development, or next phases. Explain to me why tax preparers should be looking at that, and when should they incorporate a professional like yourself?
Yeah, so you said that the incorporate is, when does it make sense? It makes sense when, one, there's expenditures. We have building expenditures. We bought a new building. We expanded a new building. We remodeled a new building. And with cost segregation in general, it doesn't make sense unless we're in a taxable situation already. So if we're in losses, we're just going to increase our NOL and carry them forward to future. But if we're in a profitable situation and we've spent, let's say, more than $750,000 on whatever the improvement is, it's a new building, it's an improvement to a building, it's ground up construction, then it makes sense to look at, because we can often take a significant portion of the assets within that building that would normally be written off over 39 years. That's commercial buildings. That's how we write off commercial buildings. And a lot of the assets we can write off in maybe 5, 7, 15, and often with bonus depreciation, a big portion of them can be written off in 1 year. So it's the profitability is key, because it's just a tax savings. Not just. It's a significant tax savings, but it is tax. If we're in a loss, it's not going to help us right now.
Well, usually these type of programs are best for organizations that are in their expansion phase, which usually means that they're already profitable.
Yep.
Right? But what's scarce is resources like cash flow and cash. So if they can free up revenue streams or profit to build, to put back in, I think is a great thing. So I just love that part. That was really good. So we're going to talk generally about advisory services, and then time's running out. So what I really like to do is talk about the Unique CPA, the podcast, because I think it's something that's really dear to you, and the smile on your face tells me that you're dying to tell us more about it. So please tell us more about the Unique CPA, because and again, great name, loved it.
Yeah, well, thank you. It was so one thing I was smiling because I love talking about the Unique CPA. Two, I was smiling because I had all these answers to advisory that we're not even going to talk about, which is completely fine with me. I'll just say tax advisory is extremely important, extremely misunderstood, because people don't even really know what it is. And most preparers are doing tax advisory right now without even charging for it. They don't realize they're doing it. And so that's important. We can do another podcast, YouTube video on that.
If you want to come back just to do advisory stuff, I can get you on. Not a problem. We can do all of them.
So the Unique CPA, and thanks for asking. This was so I had no intention of doing a podcast. I would guess you probably didn't either. Maybe you did. I don't know.
I love hearing myself talk. So this is a perfect venue for me.
Nice.
If I could talk all day, not a problem.
Right.
It's great. I'm just kidding. No. I do enjoy talking to people. What I love about the YouTube and the podcast is I get to meet people like you. I get to interview successful people and also learn. I'm learning constantly through this thing. So that's what I really enjoy about it. I'm learning with the audience.
I agree. Yes. I say that all the time. I learn every time I talk to somebody, and then I use that knowledge. So 5 years, we can go really deep into this, and we'll stay high level right now. 5 years ago, kind of changed my role in the business. Actually, 6 years ago now. Was managing partner, and due to some health issues, I actually had a stroke, and that kind of made me reevaluate what I was doing in the business. And what happened is that I gave up the managing partner role, which was, looking back, which was awesome. I probably shouldn't even have been in that role. My partner who runs it now is great. But then I got more involved with our marketing group, which has expanded tremendously in the last handful of years. At the time it was one person, but she came to me and she said, "Hey, we're going to do a podcast." I'm like, "Oh, great. You're going to host it." "Wait, what?" "I'm going to host a podcast? What are you talking about?" So when I first started, I was studying for 5 hours before each podcast, that kind of stuff. And what it's become is just a platform for my passion, one, learning from others, but my passion of trying to make our profession better, trying to help this profession, we're in the crisis mode somewhat. I mean, people aren't becoming accountants. People are leaving public accounting and doing other things. We are a very important cog in our economy, and without us, there's some trouble. So what I want to really do is try to do my little bit, whatever, and maybe it's too grandiose for me, but my little bit of making this profession an exciting profession, which I think it is. I believe it is already, but getting that knowledge out there. But to do that, we also have to get rid of the working nonstop, trying to help everybody, being the answer, because then it just becomes this grind of 60 hours, 80 hours a week, and we forget that we went in this for a specific reason, which is to help others. And if when we're helping others and we're trying to help everybody, we're diluting that help. We need to concentrate on a smaller group, charge more, and be more efficient with our time. And so the Unique CPA is kind of morphed into that. It's a podcast, which I do weekly, probably going to become 2 times a week. It's webinars that we do monthly, and now it's an annual conference that we do as well. And it's really turning into a community. We're going to have this community of people that are going to as you said, collaborate with each other going forward. So that's really what it's evolving into.
That's great. Randy, that's amazing. I've really enjoyed our conversation. The advisory component, we did talk about advisory indirectly through all the stuff we did.
Yep.
What we did is I think we did a really good job on that. So what I'd like to do for the audience that's watching us today is, how can they get a hold of you, and where can they connect with you if they want to have more information about TriMerit or yourself or the podcast?
So there's LinkedIn's great. I mean, Randy Crabtree, you can find me on LinkedIn. With our marketing department, I'm all over LinkedIn. Our website, try-merit.com. There's a Meet the Team page there. You can find my information. info@TriMerit. try-merit.com is a great email, because that'll go to the people who get it to the right spot. I always get afraid if it comes directly to me, I'm going to miss it. And then I panic, and then I'm like, okay, did I miss something? And so any of those spots for sure, but reach out with any questions you have. I have no problem. Just hopefully I don't miss your email.
Well, I'm sure you won't miss it. I'm pretty sure that will never happen, Randy.
I panic too much if that did.
You'll be fine. Randy, thanks again for being on the show, and thank you, the viewer, for watching this episode. I hope you like this topic. Please subscribe to the channel. Until next time, stay hydrated and take care. Bye for now.
Bye.